let's start off perhaps with a look at Cooperative Bank and the kind of movement we saw on that share price yesterday, sliding lower despite the fact that the market seemed to have initially had been impressed with its numbers, where we had earnings per share up 57% for the first quarter.
Yeah, well, that was an interesting turn of events. We didn't think that it would perform that well, and it did. And looking at equity numbers just released today in the morning, did equally well. Net profits look to be up about 87%. And you might want to think that banks will do the same over the first quarter, but you've got to take things into perspective. Number one, compared with first quarter results last year, you're comparing with the low base, one would argue. And at the same time, the outlook is not very good. Interbank lending rates have surged dramatically in the past few trading weeks. So there could be an impairment of value in bank assets. So yeah. I imagine investors want to take it slow and try to play it safe.
So when it comes to that fallback that we saw on Cooperative Bank share price yesterday, more as a result of the overall and general operating environment, what did you make of Equity Bank's numbers, specifically the fact that it's targeting loan book growth of between 40 and 50% moving forward? What are you expecting on that front?
Well, they have to be a bit creative on that front, because they argued today in the morning. They're saying that they're more or less securitizing or following similar structures so as to secure earnings or cash flows moving forward. So if they're able to do that, they're probably going to be able to still lend and maintain asset quality, and that's the challenge in an environment where inflation rates are going high and you've got all the risk of loan delinquency and what have you. So if they're able to take such steps, then they probably will be able to maintain asset quality as they're supposed to.
Of course, this has been a bank that's been largely a transactional one in the past. Do you see its role evolving and it becoming more of a lender moving forward, chasing this avenue a little bit more aggressively? We've heard that it's offering to launch a wider range of mortgage products as well.
Yes, they're looking to do a little bit more lending, but also on the transaction side, they're coming back largely because of their relationships with telcos. So, but going to traditional banking, perhaps they're doing that a lot more aggressively. What do you call it? The lending towards real estate, they're financing it with long-term financing. So in my view, they're following a prudent model going forward. So at this point, I'm not overly concerned as yet.
What about KCB? Because this is a company that the market doesn't seem to be overly concerned about either. We've had that share price up close enough to 2% by the close of yesterday's session, and many traders saying that there's still much more upside in the stock. We've seen Q1 pre-tax profit up 32%.
Well, the thing about KCB is that the return on assets is very low. That means that all they need to do is improve an efficiency, and that could give them quite a bit of upside. If they're able to get a return on assets similar to that of equity, or even just slightly below, that could double their profits. Seeing that they've got around double the assets of Equity Bank, but they're delivering almost the same amount in terms of profitability. And I guess that's why they brought in the consultants to help them strategize and chart a way forward. And if they're able to do that, then I mean, the investors should be able to see a little bit more returns on that stock.
Of course, looking at other news headlines, Uchumi faces strict checks for a return to the stock market, and many saying finally Uchumi making a comeback. What kind of sentiment is around this possible re-emergence of the supermarket chain on the NSE?
Well, a lot of our clients had written it off. So putting it back onto their books writing it back into their books is obviously a plus for them in terms of their portfolios. Having said that, it will come a bit more diluted because a lot of this debt was converted to equity. But on the plus side, if you look at their numbers in 2005, the balance sheet was net debt. So meaning all the risk was being taken up by lenders. So for them to have grown back equity and reallocated it back to previous shareholders, that was quite a stroke of luck for shareholders, and I think they should count the lucky stars. Having said that, relisting of the shares still faces a couple of hitches. They've been given some conditionalities, some of which I think are harsh, but maybe it's because of its history. But overall, it's a positive development for the market.